Welcome back to The Explainer, dedicated to all you focused learners out there. As an IFRS compliance officer, I literally spend my days deep in the weeds, ensuring that business data is transparent and completely audit-proof. So today, I am absolutely thrilled to step into the meticulous world of global financial standards with you. We're going to unpack the newly released 2026 Modernization Blueprint. We are looking at how a genuinely vital piece of financial software is finally shaking off decades of legacy code to give us a pristine, modernized digital foundation. So grab your digital notebooks, because this is a really fascinating deep dive into the very architecture of modern compliance. Let's take a quick look at the agenda for today's Explainer. We'll start with the 2026 compliance standard. Then we'll look at fixing legacy technical debt, modernizing the chart of accounts, examining some specific sole proprietor setup examples, and finally, mapping out the 2026 tutorial roadmap. Let's get right into it.
Section 1. The 2026 Compliance Standard. Modernizing Audits.
Okay, let's dive into this, because we really have to start by acknowledging a hard truth here. Legacy systems, they are increasingly failing modern audits because of some pretty severe structural limitations. But compliance absolutely shouldn't mean paralysis, right? I love this fantastic quote right from the blueprint. Overcomplicating a tutorial with IFRS for a sole proprietor is like trying to teach someone to drive using a Boeing 747 manual. It's so true. The software has to act as a guardrail. It should automatically guide the user toward compliance without completely burying them in technical jargon.
Moving on to Section 2. Fixing technical debt, upgrading the foundation. So before we can even think about building a compliant chart of account, that underlying digital foundation absolutely has to be secure. Consider the major shift away from the clunky legacy MS Sans Serif font to a modern, fully Unicode compliant system. It seems small, but this literally solves massive user interface headaches, things like wandering checkboxes and weird text truncation. By fixing this UI foundation, complex scripts, we're talking Greek, Turkish, Arabic, and Chinese, they render flawlessly now. This means translators can finally focus on true conceptual accuracy for global localization instead of constantly fighting the software.
And this brilliantly illustrates what happens when you fix that backend. This change is incredibly exciting for the database architecture. Just look at that jump in field lengths. For decades, legacy systems forced users to abbreviate absolutely everything down to a tiny, restrictive 35-character limit. The 2026 modernization blasts that open to 128 characters. Now, technically, this is a huge deal because it definitively solves the infamous dynamic SQL 303 error, but from my perspective in compliance, it's a total game changer. It allows for highly detailed, unabbreviated account names and transaction notes, which are strict requirements for ironclad audit trails.
So what does this all actually mean? The big question we really need to ask is, how do these technical fixes actually change your daily accounting workflow? I mean, sure, it's great that the database is stronger, but how does that translate to the screen that a business owner looks at every single morning? Let's bridge those technical back-end changes directly to your practical day-to-day structural upgrades.
Section 3. Modernizing Accounts. Chart of Accounts.
Now, what's really interesting about this transition is how it completely reimagines the brain of the operation. I always say the chart of accounts is the brain of your business. If it's disorganized, well, your reporting's going to stumble. Just consider the immediate clarity you get by ditching random alphanumeric codes. The old 1980s style used confusing, disjointed jargon like G 1100,000 debtors control. Yeah, not great. The 2026 blueprint completely shifts away from that to a clean, logical 4-digit numeric system. And because we're using those new 128 characters, we can clearly spell out 11,001 trade receivables customers. It's just instantly, inherently professional.
And this numeric logic makes building financial statements incredibly intuitive. It's like a perfectly organized filing cabinet. The 1000 block is strictly for your assets, what you own. The 2000 block is for liabilities, what you owe. And the 5000 block is dedicated to revenue, what you earn. Because numbers are a universal language, this specific structure brings perfect consistency across over 27 global language versions. So Code 5000 will always represent revenue, whether you are reading the report in English, Vietnamese, or Arabic. It's totally seamless.
Section 4. Sole proprietor setup, practical examples.
Okay, it's time to step into the shoes of a local business owner. Specifically, let's use the handyman sole proprietor setup from our source text and see this new workflow in action.
Instead of a jumbled mess of ledgers, this guy uses highly specific, readable accounts. Account 1010-1000 is his business current account, and then accounts 11,000-1001 through 6 map directly to his specific customer names. Remember, because we unlocked that 28-character limit earlier, he can spell out exactly who owes him money. This perfectly satisfies modern auditors without making the handyman pull his hair out.
So the crucial point is how this completely transforms the audit trail. In the old legacy system, a user might just lazily type repairs into a journal entry. Good luck explaining what that was to a tax authority 3 years later, right? No way. Now with the new character limits, they can write out exactly what happened. 5x new tires, fitting and balancing. This highly specific detail follows the transaction straight through to the general ledger. So when year-end reviews roll around, the whole picture is just crystal clear.
And speaking of crystal clear, let's talk about opening balances. Honestly, it's a notorious pain point for compliance officers. To establish a solid take-on certificate now, the user simply records opening quantities right in a stock journal. They use a standardized reference, something clear like Take-on 2024. This guarantees that if an audit ever does occur, you can prove exactly where that initial R6500 asset actually originated. It makes professional accountability incredibly easy to maintain.
Section 5. The 2026 Tutorial Roadmap. The Educational Shift. Let's move to the roadmap and see how this builds, because obviously since the software has modernized, the educational resources have to match this new digital landscape. You simply can't teach modern standards with a 1980s manual. Notice how the curriculum has been beautifully reorganized into these logical success pillars. Phase 1 focuses heavily on the digital foundation, moving straight into setting up a global digital office. Phase 2 is all about engineering your chart of accounts, and then Phase 3 introduces the transaction engine. It's entirely outcome-focused, practical learning.
A massive part of this educational shift is the actual terminology itself. Look at this crucial adoption of academic standard terminology, which aligns perfectly with university curricula all over the world. Instead of using outdated bookkeeping terms like sales, the tutorials now teach you to use the globally recognized term revenue. Instead of saying interest paid, it uses finance costs. This ensures that even micro-business owners are learning the exact same professional language used by their compliance officers and auditors. It really levels the playing field for everyone.
Which brings us to our final, and perhaps most important thought for today's explainer. Is your digital financial blueprint ready to tell a clear, highly detailed, compliant story? Or is your data still hiding behind 1980s technical debt and tiny character limits? The 2026 modernization gives you the exact structure, the space, and the logic you need to meet global standards without the headache. It's absolutely time to upgrade your foundation. Thanks for joining me today, Focus Learners. Keep structuring, keep learning, and I'll see you in the next explainer.